Imagine this, you're holding a bill in your hand and your heart sinks as you see the figure. It's your monthly car payment, and it's high. So high, in fact, it feels like you're paying rent on a second home. Now that might sound like a far-fetched analogy, but let's dig a little deeper. We all know the financial burden that comes with rent payments. They're a significant chunk of our monthly expenses. Now factor in a car payment that's equally hefty. It's not just about the upfront cost of the car, but the ongoing expenses, maintenance, fuel, and let's not forget insurance. These costs can be a strain, particularly if you're managing other financial obligations. And here's another crucial point. Once you sign a car purchase contract, unlike a rental agreement, you can't simply return the car if you find it's too costly. You're stuck with that financial burden. It's like carrying the weight of a second home, with all its associated costs on your shoulders. But what if we told you that your car payment is in many ways similar to your rent payment? Intriguing, isn't it? Let's dive deeper. Just as you pay rent each month for a house or apartment, you're also paying each month for your car. But instead of a landlord, you're paying the bank or the car dealer. Now let's break down what exactly you're paying for. Much like your monthly rent, a car payment is not just a single, simple amount. It's made up of a few components. The largest portion of your car payment typically goes towards the principal, which is the initial amount you borrowed to purchase the car. This is akin to the rent you pay, which gives you the right to use and enjoy your living space for the duration of the lease. Then we have the interest. This is the cost of borrowing money, and it's determined by the interest rate set by the lender. Think of it as a service fee, much like the maintenance or management fees that some landlords charge on top of rent. Also, just like how paying rent doesn't mean you own the property, making car payments doesn't mean you own the car outright, not until the loan is paid off. Up until that point, the bank or the dealer holds the title of the car. They have a claim on it, much like your landlord has a claim on your apartment or house. However, there's a silver lining. Each car payment you make reduces the principal amount. Over time, as you pay down this principal, you gradually gain equity in the car, just like you might build equity in a home through mortgage payments. And once you've paid off the entire loan, the car is yours, free and clear. So in essence, until you've paid off your car entirely, you're essentially renting it from the bank or dealer. It's a bit of a thought shift, isn't it? But understanding this can help you make more informed decisions about your finances and how you handle your car payment commitments. And remember, just like rent, these payments are a crucial part of your financial health and credit score. So, in essence, until you've paid off your car entirely, you're essentially renting it from the bank or dealer. But wait, there's more. Along with your car rent, there's another bill waiting in the wings, your car insurance. Yes, my friends, the financial burden of car ownership doesn't stop at your monthly car payment. It extends to the realm of car insurance, a necessary expense that can significantly increase the monthly cost of owning a vehicle. Let's delve a bit deeper into this. Car insurance rates are not one size fits all. They can vary greatly and are based on a number of factors. One of these is the model of your car. A luxury car, for instance, will typically have a higher insurance rate than a standard model. Why, you ask? Well, luxury cars are generally more expensive to repair or replace, making them a higher risk for insurance companies. Another factor that can affect your insurance rates is your age. Younger drivers, particularly those under the age of 25, often face higher insurance premiums due to their perceived inexperience on the road. And let's not forget your driving record. If you have a history of accidents or traffic violations, insurance companies view you as a higher risk, which can result in higher premiums. So, just as you pay for utilities and maintenance on top of your rent, you're also paying for insurance on top of your car payment. And just like with rent, it's essential to factor in these additional costs when budgeting for car ownership. So, the next time you're staring down the barrel of that hefty car payment, remember it's just like paying rent. Both are necessary expenses that require careful budgeting and understanding. We've unpacked how car payments are akin to rent, and how insurance rates can significantly impact your monthly outgoings. It's vital to remember that knowledge is power. And remember, understanding your financial commitments is the first step towards managing them effectively. Drive safe, spend wisely, and we'll see you next time.